right. Hey, everybody. I'm Gail Worth, founding board member of the NPDA, National Powersports Dealer Association. I own Shawnee Cycles and Powersports in Shawnee, Kansas, and I recently closed my Harley-Davidson dealership in Kansas City, Missouri, called Gail's Harley-Davidson. I want to thank you guys so much for participating in our EDGE webinar series. The NPDA is dedicated to helping our industry grow by promoting excellence, supported by a strong foundation of development, growth, and education. And this is what we call EDGE. So we have with us today members of CBIZ, and I'll be introducing them to you in just a second. First, I want to tell you that today's webinar is going to be so much more interesting than you might have expected. I know that I personally learned so much about LIFO in the last couple of days, and it's way more than just a way of doing business. So we're going to explore the concept of LIFO and discuss strategies to maximize the effectiveness of your inventory. And our experts from CBIZ are going to share all of this with you. So with us today are Andy Spears and Jane Saxon. Andy is a talented tax manager from CBIZ's Salt Lake City office and is quickly becoming an expert in the powersports industry. His passion for adventure started early. He started riding ATVs and snowmobiles when he was a kid, and now he's so excited because he gets to combine his hobbies and his career. And while he's doing that, he gets to have a real impact on the dealership space. So I've really grown to like Andy a lot and lean on him. Jane is a manager director of CBIZ in Indianapolis. And she's also a private and commercial industry service team leader for the Central region. Her focus includes serving the automotive, powersports, RV industries, so many different industries out there. Her passion is working with owners to maximize the value of their dealership and preserve their hard-earned income, both the dollars that go into their business and personally. And she's so informative. I love talking with Jane. CBIZ itself is one of the largest accounting firms in the country. And here, this is cool. They have offices all over the United States. And while they're well known for things like audits and tax returns, they actually do a lot more. And they'll work with your tax accountant. And they offer services like payroll, employee benefits, insurance, kind of a one-stop shop to support your business. So let me turn it over to Jane to share more.
Absolutely. Well, Gail, thank you for the kind words and the wonderful welcome. And Andy and I are very excited and honored to be here for the webinar today and to share some information with you that we think could be impactful to each of your dealerships from a cash flow perspective. And as Gail said, I hope you find it as interesting as she did. When we start talking about taxes and accounting, sometimes I always say I get a little nerdy accounting on everybody, but these are practical options and opportunities that can really make a difference in your bank account. So we're excited to share that today. And as Gail said, CBIZ itself, we're the 7th largest accounting firm in the country. The name is not well known. That's because we really pride ourselves on operating in the industries that we are experts in. So my team works only with dealerships. And when I say my team, I mean my team across CBIZ, the dealership team across the country. And the real commonality of that is the tax code applies to auto dealers, to RV dealers, to powersport dealers. They don't differentiate between the type of dealer. NADA is one of the powerful lobby groups, and you guys are right on the heels of that. I'm excited to see the growth here. We attended your conference last year, the inaugural conference, which was fantastic. And, looking at NADA, where they have grown to, they're one of the most powerful lobby groups in Washington, and they lobby for a lot of meaningful advantages for their membership. Lucky for us, those advantages or those tax provisions filter down to the other niche areas. So like Powersport, like RV dealers. So we're able to leverage some of what they do and bring it to you guys. As Gail said, we offer a lot of different services. So we do the traditional accounting and tax that you're used to from your CPA, but we are much more than that. We are a full financial services firm. So we want to, we want to help you with your accounting, your tax, your banking relationship. We want to help you manage your borrowing, the operations in your business. We also offer advisory services, meaning, if you're an unfortunate victim of internal fraud, we offer forensic consulting. If you are gifting out of your wealth, you need evaluation for your business, or you're hoping to sell your business, or you're buying a business, perhaps evaluation. We can help on the insurance side, the payroll side, insurance being garage liability, even captive insurance for reinsurance, warranty type, extended warranty type products, typical insurance, property casualty, retirement, 401k plan design, plan platforms, and then technology. We've got a super, I think, cool technology group. They're very, very innovative. When I listen to them talk, most of the time I don't understand most of what they're talking about, because it's so high level and so futuristic to me, but they come up with fantastic solutions for our clients. So excited to talk to you guys today about specifically about last in, first out inventory. And although that isn't exciting, the cash flow that it generates can be. So with that, Andy, why don't you give us a little intro into what LIFO, or last in, first out, means?
Yeah, thanks, Jane. I appreciate it. I appreciate the introduction, Gail. And hopefully, after this webinar, you can kind of be like me. Whenever someone asks you, why are you so happy? You can just tell them, I'm high on LIFO.
That's hilarious.
So LIFO is a acronym. It's last in, first out, and it's a inventory accounting methodology. You might be familiar with the idea of FIFO, or first in, first out. We're going to talk about kind of two key aspects of what LIFO is and how that applies to you as a dealer. The first concept is this idea of the actual flow of goods. So if you imagine like a hardware store selling a bucket of bolts, they dump product on the top, customers take product off the top. The stuff that is last in is the stuff that's first out, first sold. So that's the idea of how LIFO works. And in an inflationary environment, what that means is that you're selling your newest created product, which means is probably the most expensive as well. That kind of gets us to this idea of valuation. So LIFO valuation is the same idea, but it's separate from the actual flow of the goods that you're selling. So you sell whatever you are wanting to sell, and generally it sounds like that's still kind of a first in, first out, so what you want to do. But you apply the cost of the newest acquired inventory. So you're selling the most expensive inventory, but you're also selling the oldest inventory. And I know what you're thinking. That sounds like an absolute nightmare. I'm selling bike A, but I'm saying on my financials the cost of goods sold is really from bike B, and it's a total disaster to keep track of that. Hang on to your seats, because you're right. That sounds very nasty, but that is not what we're proposing here. So real quick, LIFO, why do you want to do that? Again, it's this idea of making inflation work to your advantage. So you're selling your most expensive product, or deemed to be selling your most expensive product. That's going to push your net income down. And as a tax person, that is a good thing. we like pushing net income down because that means you pay less in income tax. And that brings about the cash flow that Jane alluded to earlier, because now you're paying less tax, you have more money in the bank to be paying on, financing obligations or, remodel work or buying new equipment and things. So you get to use the money, not the government. LIFO, stepping back from this idea of trying to apply it on a product by product basis, is really, we apply it more on like a bucket by bucket basis. So the way that this works is you take your bucket of inventory, for example, your bucket of motorcycles, multiply it by the inflation rate, and that gets you a LIFO expense. These buckets of inventory are determined by the Bureau of Labor Statistics. So that's where we get our inflation rate, but also it's basically what says, hey, all motorcycles, whether it's on road or off road, are subject to this inflation rate. And your ATV, side-by-sides, snowmobiles, parts, they're subject to this inflation rate. So I guess my point with that is this LIFO expense is kind of like a bolt-on part or accessory, because it goes right over the top. It's an accounting adjustment. It's not something that you are required to track on a vehicle by vehicle basis. It's literally something you put in or you can take off back into the financials as you go throughout the year.
Okay, so let me throw this out there real quick, because this is where I was confused when we talked about this earlier. I have always believed in, as I think most dealers do, first in, first out, because you want to get rid of your oldest inventory first because of the flooring. You don't want to pay flooring.
Right. Yes.
So let's talk about that confusion.
So we don't want to change that. And if you make a election for LIFO, it's on your tax return. It doesn't change which vehicle, which product, which piece of inventory you sell. You still sell the piece of inventory that the customer wants to buy. Think of it with a automobile, because remember I said back in the day, the NADA lobbied for a lot of favorable tax provisions. Well, this is one of them. They came to Congress and they said, hey, we want to be able to use this last in, first out method for automobiles, for passenger cars, because it's going to save our dealers tax money. Well, you can imagine Congress was like, but you know which car you sell, it's got a VIN number, right? And they said, yes, we do, but we want to ignore that. We still want to use the method. We're still going to sell the car we want to sell. We're going to still use this method. Congress approved it. Again, a very strong lobby group, right? So this is not going to change what you sell, how you sell it, when you sell it. As Andy said, this is a bolt-on at the end of the year. So we as accountants take your inventory at the end of the year. We look at it. We look at the different buckets that he described. And we say, here's which buckets these go in, how much inflation is in those buckets. And we just make an entry into your accounting records one time per year at the end of the year that then goes into your tax return. Doesn't change anything, doesn't affect your inventory, doesn't affect, you don't make an entry to each unit. It doesn't affect what you sell. It doesn't change the cost basis of any of your inventory in your DMS system. It's just a journal entry, if you will, at the end of each year. From your perspective, you're putting in two numbers.
Interesting.
But the result is it saves you tax dollars. I say LIFO it's an interest-free loan from the US government. So it's very similar to, it's a tax deferral. It's very similar to, many of you are familiar with bonus depreciation. You buy a piece of equipment, you expense it all in the very first year, even though that piece of equipment's going to last for the next 10 years or even 20 years, you expense it all in the first year. Now, when you sell that piece of equipment, there is going to be some recapture of that depreciation or when you close your business, but it's a tax deferral. 401k is very similar. You put in money into your retirement savings account pre-tax in order to allow a bigger amount to grow in the market so that you're using, quote, Uncle Sam's money to grow. And then someday down the road, you're going to take that out and pay some tax on it. LIFO is the same way. It's an interest-free loan from the US government that can go on indefinitely.
Okay, so what you're saying is we can claim LIFO, I don't know what you call it, but claim LIFO in our business for our parts as well as our motorcycles.
You can. Yep. Typically, we use it in parts and in your new inventory. Typically, we can use it for used, but typically we get a better answer to use just write downs for used. You guys are all familiar with that. You want to write down to market or to the, the fair market value, blue book value. We want to use that. That gives us some flexibility in our used side, but it is highly effective for new and parts. And if you have a large parts inventory, it can be amazingly effective.
Okay, so I have a question for you. And I know I can't remember if this is on a slide later or not, but I'm going to throw it out there.
That's okay. No, that's great.
So let's say my CPA has never brought LIFO up. I mean, we just go about life like this. Could I, even though I'm happy with my CPA today, could I contact you and like you guys work together or something so that I would help me decide if this is the right direction?
Yes, absolutely. So with just a little bit of information, we can run an estimate of what we think the benefit if you would move to LIFO for your new and parts. We can run an estimate of what that benefit would be for the year. And Andy's going to go through some slides here in a minute that show you kind of how we do that and what we look for to decide, because we don't just randomly say, hey, do this. It's good this year. We want to know that it's good for many years, not just this year. We want to know that this is a good decision for the next 10 years, even the next 20. So we look a lot of historical data that we have access to. But quick answer to your question, yes, we offer a free second opinion. We'll help you on this. We're committed to the industry. We're committed to the association. So we want to help. We benefit from helping. We are absolutely complimentary. We'll give you an analysis of what we think the benefit could be, talk you through what it is. If you want us to talk to your CPA, we'll absolutely educate them on that.
That's fantastic. I like that. Thanks.
Yeah, definitely happy to help. That's a lot of why we really do what we do.
Yeah, because this could be a substantial savings.
It can, and especially in an inflationary environment with high interest rates. It's kind of the perfect storm. So, and when we talk about inflation, inflation has dialed back a little bit from its high point a few years ago, but now we're introducing tariffs into that. And tariffs have the same effect as inflation. They raise the price year over year of historical models and inventory. So we're kind of back into what could be a real sweet spot, depending on what your product mix is. We've still got high interest rates, floor plans still high, and we have new increasing cost as a result of tariffs, and we still have a base level of inflation built in. So it could be the perfect storm. And I always say, if you're not taking advantage of a opportunity, if your competitor next door is, you're at a competitive disadvantage. They've got more cash or working capital to push back into the business to grow, to be profitable. So worth looking at.
Yeah. I'll throw a couple more catchphrases at you since I'm in the mood. LIFO is kind of like that silver lining of that perfect storm, right? Because again, you're taking advantage of something that's bad, inflation, and putting some money back in your pocket. And that's where, you can really leverage it and kill two stone birds with a rock, because you can take that cash and then pay down your flooring, which is, at these higher interest rates now. So,
right.
I mean, it's really kind of a multiplier.
Andy is going to be a stand-up comic when he's not doing accounting. I'm going to have to make sure his career. I love it.
This gig doesn't work out, I'll go back to entertainment.
Yeah, right. Awesome.
And I'll buzz through these next slides. Gail and Jane already hit on these, but does LIFO make my life harder? No, it does not. It's bolt-on accounting adjustment at year end. And also, it's if you've got bonus or other incentives that are based on profitability and you do want that income, this adjustment can be backed out. So it's flexible in that respect as well, as far as your managerial accounting goes. And
Andy, can I throw one thing in there, if you don't mind?
Yeah.
So as Andy, I'm gonna jump on where he said that LIFO is added back if you have pay plans that are calculated off year-end net, et cetera. It absolutely is. But it's all bankers are also very familiar with the concept of LIFO in the dealership industry. So if you have covenants or financial statements that you need to hit certain metrics, LIFO, the expense of LIFO is added back to your income because it is a tax election, tax change, not a true cash expense.
Yeah.
So to Andy's point, it is kind of the best of both worlds.
Yeah.
All right, Andy, take us on.
Yeah, so let's talk about some of these factors that go into making a LIFO election and whether it makes sense. First off, as Jane said, this isn't something that we want to be just kind of one and done with. So inflation frequency is important. Are we in inflationary periods more often than not? If you ask my checkbook, it would say yes, we are. Historical inflation rate. This is kind of your bang for the buck. Auto dealers and kind of power sports as well. We're looking for at least a 1% historical rate. And to kind of piggyback off that, the LIFO election year is important because if you elect in when the rate is lower than that 1% average, it's not going to do much for you. You elect in when it's higher, and it's going to be a bigger bang for your buck. And finally, the last factor is how big of a bucket of inventory are we talking about? 2 to 5 million starts to get interesting. Once you're over 5 million, it's definitely really starts to be a big benefit. And we've got a slide that will show you that in a minute, how it compares across different dealer sizes. And I'll just emphasize again, LIFO can be used on new vehicles, used vehicles, and parts. Sticking with the new vehicle and parts is the best way to go, generally, just because of the fact that we're already writing down used inventory, and we'll have to claw that back in the election. Okay, so historical rates. As you can see, green is good. As far as inflation goes, you can see this is our motorcycles, and then kind of everything else. We're in this situation where we've got inflation more often than not. I'll point out, these, last couple of years, 2020 through 2024, we saw some really good rates on both sides. And then this year so far has actually been, kind of flat comparatively. This last month, we actually got a good bump on the ATVs, off-road vehicles side of things that might make things interesting for us as we go through the rest of the year. Jane already hit this. We need, really just a little bit of information to put together an analysis to see if LIFO makes sense for your dealership. Just need a report of what's on your inventory, whether that's off the balance sheet or out of Lightspeed or your DMS system. And we'll take a look at it. It's complimentary, it's free, so nothing to lose just looking at this.
Oh yeah, that totally makes all the sense. And I appreciate that you guys are doing that for our dealers.
Yep, absolutely. Yeah, it makes sense. And, you know, it can be a long-term benefit. So even if the answer may be no, not this year, but we should check again next year, because typically there is going to be a benefit, especially depending on your mix of product and how impacted your overall cost is by tariffs, things of that, you know, increase in cost. Typically we see increasing inflation is generally never, we don't have deflation. So typically, even when inflation is 1%, I don't know about you guys, but as long as the math works, if it makes sense and I'm saving money by not sending extra cash to Uncle Sam, I'm happy about that.
Definitely.
So
Andy, will you take us through this as well?
yeah, I was going to say, hopefully you're high on LIFO now. We wanted to make sure that you understand that there's, I want to say consequences, but you know that this is part of making a decision with your eyes wide open. As Jane's said several times now, LIFO is effectively an interest-free loan from the government. You're hanging on to that cash by not paying your tax now, but there are events that could trigger kind of the reverse, where you start clawing back that LIFO reserve, and periods of deflation is an example. Material inventory liquidation. So I think COVID might be a good example of that, where you've got these kind of just weird market forces where you're suddenly out of inventory, and you work through those LIFO layers and get back to kind of being on the same cost basis. So those are maybe the oddball ones. The last point, the sale of your dealership, is something that I think everyone's going to face eventually. And with some effective planning, you can make this LIFO election still work for you, even though you've got to claw back. So,
and we, on the sale of a dealership, or in a case where we can predict a decrease in inventory, we actually use that as part of our strategic tax planning. So, you know, an example many years ago that we had, which was a win for a client, we had a large client who, they were a C Corp. We knew that they wanted to sell their dealership within the next 5 years. And we also had the benefit of seeing what the new tax law was going to bring to us. We recaptured, they were on LIFO, they had a large LIFO reserve. They had an interest-free loan from the government of about $30 million. We recaptured the tax on that as a C Corp at a 21% tax rate. We then converted them to an S Corp. They had taken those LIFO deductions prior to the tax rate decreasing. So they'd taken those tax deductions when the tax rate was much higher. They got a permanent difference, a permanent cash inflow of a lot of money. And we did that all in preparation over a 4-year period that we knew they were going to sell their dealership. So having some vision of what you guys are going to do for the future, or if they want to grow, that all goes into the strategic tax planning and timing. So nothing is done as a surprise. Nothing is in a vacuum. It's all very purposeful and planned.
Yeah. That's when something like LIFO becomes really powerful, right? Because you can take that deduction in a year, you're generating income and paying tax at a higher rate, and then picking up the income, deferring it to a year when you're paying tax at a lower rate. That's when that benefit, as Jane said, becomes not just a loan, but a permanent benefit to you. So without further ado, I'm going to jump into this example. That's a lot of colors and spreadsheet stuff. But to explain what it is it's basically a group of dealerships that I worked on. We had them do a LIFO election in the 2023 tax year, and then kind of the follow up in 2024. So wanted to show you the impact of what that did. 3 different dealership sizes, from 4.5 million in inventory up to 14 million. The year 1 inflation rate was very generous. If you memorize the chart I showed you, you're not going to see these numbers. The reason why it's so generous is because it's a year 1 election. It's like going from 0 to 60 on the freeway, right? It's big acceleration. It's a big jump. That's why these year 1 elections are so important. And if you look at, I'll focus on the medium dealership. They had $181,000 of LIFO expense, and at a 30% tax rate, that's worth $54,000 today that they were able to save and then use on those flooring or to acquire new inventory, or whatever they want to do.
Yeah.
Year 2.
Oh, go ahead, Andy. I'm sorry.
Year 2 rolls around, and this is kind of the equivalent of going on the freeway from 60 to 65. So inventory, large dealerships up, medium is actually down, or small dealerships up a little bit. The inflation rate is quite a bit different than year 1, and the reason is this is just that incremental change. So you're not going from 0 to 60, you're going from 60 to 65 in year 2 and forward. LIFO expense and the tax savings are still there, not as high. Again, it's 60 to 65. What I wanted to show you on this example is the inflation rates. Large, medium, and small, actually quite a bit of variance in here compared to year 1. And this is where you can start to see how product mix becomes an important factor. So our large dealership motorcycle inventory was 19% of the total, compared to almost 37% and 5% to our small dealership. And last year in 24, the off-road vehicles actually had a little bit of deflation. So the fact that this medium dealership has so much more motorcycles on hand gave it, almost double the inflation rate as the large dealership. And if you look down, kind of bottom line, it's got, less than half the inventory as our largest dealership, but its LIFO tax savings is almost the same. So 23,000 compared to 25 or 26,000. So product mix is a very important variable here.
Okay, product mix, inventory growth. So if you are growing your inventory, adding a new line or adding a new dealership to your mix, this can be very beneficial in helping to preserve some of your cash flow in order to offset the investment cost of that.
Yeah.
Okay, guys. So Larry from Minnesota sent in a question. He said my wife does the accounting, and she's asking me to ask you, how does adopting LIFO change my day-to-day operations?
0. It does not change anything.
That's fantastic. Because you know what? I can understand where she's coming from, because it sounds like it's going to cause a lot of extra work for the accounting department.
Yeah, that was our concern as well. and our client's concern, this client that I'm showing you here,
Mhm.
we don't want to make it harder. Conceptually, there's a lot to it. When it comes down to your books, it really is single journal entry at the end of the year. Here's your LIFO expense. Here's an adjustment to inventory account.
Yep. What we need from you at the end of each year, let's say that we go through an analysis, we decide this is right. What we need from you each year is the same information that you provide to have your tax returns prepared or your financial statements prepared. We need to know your inventory. We need to know dollar volume by product mix, which typically is in your accounting records. We do the calculations all behind the scenes. You don't have to do any of that. And then we give you a journal entry to make, and it's a very simple double-sided entry. And that's on December 31st, either on your 12th month, or if you run a 13th month statement, you can post it in your 13th month. But your accounting team, or if you are the accounting team, you're not going to do anything for this. It's very, very simple from your end of where you guys sit. It's all back office on our side.
Sounds like some easy money.
It is. I mean, it actually
it does.
really is easy money. And, it's just going through the analysis, and it's just not a heavy lift for the dealers themselves. And like I said, car dealers have been using this for decades. This is nothing new. This isn't just a clever trick. It's not some new cute little tax idea. This has been in play in the broader dealership world for decades. And I would venture to guess that 80%, maybe more of large car dealers, franchise car dealers, Chevy, Toyota, what have you, use this method to account for their new and parts inventory, as do ag equipment dealers like John Deere, etc. So not new, not clever, just has not made its way down to each of the niche industries. Like I said, NADA has been very good at lobbying for these opportunities for their membership for years.
Yeah, okay, so I'm going to throw this out there real quick. I'm going to wave the NPDA flag because you've mentioned NADA has helped us in such a huge way across not the automotive industry. The NADA has helped the powersports industry because these laws affect all of us. And that is a huge reason to be a part of the NPDA.
It is.
Everyone listening, thank you so much.
No, and I'm excited for you guys with that because I think you guys, this is new for you, and I'm really excited that you had such a great kickoff to it. Having an active association is powerful to the industry and can drive significant and meaningful change for the industry. I'll give you one other small example of how what might appear to be just being a member of an organization and joining meetings with your peer groups is actually much more than that. In the RV dealership world and in the RV association, there was some tax legislation that accidentally got through. It was not intended to be punitive to their industry. However, the result was that it is. That association is lobbying Congress for a change in that punitive tax law. It was pushed through by our friends at NADA, who were looking at it from a car perspective. And specifically, it refers to a tax provision that applies to motorized vehicles. Not all RV dealers sell motorized vehicles. Trailers are not motorized. And it affects their ability to deduct their floor plan interest, which is huge money, right? That association is going back to lobby Congress for a change. We've helped them put together economic examples of how it impacts the industry. You guys have the ability to do the same thing as you grow. And it's really, coming together as a strong group and supporting the industry and being seen. So I'm excited for what you're doing.
Thanks.
Join.
Yes. Thanks.
All right, Andy, what else do you have for us?
The kind of the hot topic on and off the last several months has been what's going on with tariffs. And there's a lot of smoke and steam about this earlier in the year. Things have been kind of flat until recently. It's kind of coming back, and we're not going to get into the nitty gritty of tariffs and the impacts they are. Mark Sheffield put together a wonderful article that's on the NPDA's website already about some of these factors to consider. I want to just jump back to this slide real quick and show you kind of what I mean. You know, the first half of the year, like I said, has been kind of flat. And then not until yesterday, when we got the new Bureau of Labor Statistics, did it even seem to make sense to do a LIFO election in, you know, off-road vehicles. And just a significant jump this last over this last month. Part of that being, you know, possibly because, you know, pre-tariff inventories finally starting to run out. You know, that's, I think, one factor. There's a lot of factors that go into stuff like this. So I'm not a tariff expert. Just want to throw that out and say, you know, this, what the next 5 or 6 months brings could be really interesting and may make something like LIFO extremely valuable.
Yes,
Yeah.
absolutely.
And I'll hit this real quick. I'm not a tariff expert, but CBIZ, we do have experts that do hit some of these other areas where supply chain management, cost management, strategic pricing, things like that might become an important player as well. I think, again, Mark's article actually alluded to a number of these as well. So if tariffs are concerned, we can certainly help you out in that arena as well.
Yeah, I'm glad you brought up that that article of Mark Sheffield's at the NPDA website, because it's a really fantastic article. And if you guys out there watching have not read that yet, you might give it a read, because it explains from Mark's perspective, which I believe is fantastic. Mark's this really super smart guy, and it gives you some really great information, some insight into how tariffs truly will and do affect us.
Yeah, absolutely. It's an interesting world, and interesting that it's coming back. We've been an international economy for a long time, but it's been a long time since the free trade agreement was enacted between the US, Canada, and Mexico. And life before that was a little bit different. So we're rolling back into some historic waters, and tariffs are real, and it does slow down supply chain. There's a lot more administrative burden around it. There's cost. There's a lot more reporting. So, and all of those things affect the consumer and affect you as the retailer. So understanding.
And the more informed we are, the less scary.
Exactly.
Because right now everyone's scared. They don't know what to think. And so they think, oh no, the world is ending. But
exactly.
You know, let's find out more.
Yeah. And being able to communicate that to your customer, so that the customer, your customer, has an understanding of, you know, when they see a price increase, why and how it's affected you. It's a lot of education.
Yep.
On that note, we are going to be doing another webinar for you, Gail, on the new tax bill. So I think we have that on the calendar. Is that August 18th? What date do we have that on the calendar for, Andy?
I think it's coming up. I think we've got it on August 7th.
August 7th. So
Yeah.
We're going to be talking about the One Big Beautiful Bill Act that just passed on July 4th. There are a lot of very favorable provisions in there that I think we're going to find a lot of benefit for our dealership clients. So we're going to share some of those thoughts with you, things to look for, things to start discussing in your dealership and among yourselves. So just want to welcome you back for that. Make sure you know that that's going to be fully focused on dealerships and you guys. So I like
Yeah, I'm
it.
glad you brought that up because the big beautiful bill has a lot of great things in it that are going to help us.
It absolutely
We need
does.
information from you guys on that.
You do. And I think that it is going to be helpful, and especially with all of these other impactful forces coming at us, like tariffs and
Right.
change in economy. So I think this is good. This is good tax change for us. So we want to make sure you guys are aware of it. I think I skipped a couple slides there. Let's roll back to questions. Gail, were there any other questions that we needed to address?
Yes. I'm glad you brought that up. Yep. Because Steven said, what's the difference between cost flow and valuation of goods?
Between cost flow and valuation of goods. Are you referring to a specific slide that Andy had up?
Yeah, I can't answer that because that was Steven, not me.
Well, so I'm going to answer what I think your question is.
Okay.
So let's talk about LIFO as we apply it to a particular piece of inventory. Let's say you have a motorcycle and your cost on that is $42,000. And in a very granular example, we say based on LIFO, the cost of that motorcycle is $38,000. We didn't really change the cost of that vehicle. That vehicle really still has a cost of $42,000. You paid the manufacturer $42,000 for it. We didn't change the cost. We changed the valuation of that piece of inventory to $38,000 for tax purposes, meaning that we are taking the difference between the cost and what we value at and treating that as an expense for tax purposes. So it's kind of the difference between reality and illusion. You know what your real cost is. We're not changing your real cost. LIFO is for lack of a better term, an accounting illusion that attempts to value this piece of inventory back to when it was originally produced. So an F-150, if we have a Ford dealer that has been selling F-150s for 40 years, and they've been on LIFO for 40 years, the 2024 F-150 is valued at what the LIFO value would have been 40 years ago. It doesn't make any sense. I will be the first to admit it makes 0 sense, but it is a gift from the IRS that we should take advantage of.
Definitely. They don't give us very many gifts.
They don't give us very many gifts. And when they do, we should take advantage of them. It makes no sense to apply it to specific vehicles or equipment that we're selling. Like Andy said, we know what we're selling. It makes sense when you've got a bucket of bolts and we dump on the new inventory on top where our customer isn't digging from the back. There are places where last in, first out makes sense. It's physically, it doesn't make sense, but it is an IRS gift. So take advantage of it.
Yep.
I hope I answered that question.
I hope you did too. I think you did. You answered it for me.
What else?
That's the other question that popped up before Larry's question. It was the same. Larry's a duplicate. So that's all I have right now.
Okay, very good. All right, Andy, what else did you have? I know we skipped a couple slides there.
I think we're pretty much there at the end. Just again, maybe wrap up the topic at hand. LIFO is it's a paper thing. It's an accounting thing that can really save you some significant amounts of cash when it's used properly. It does not change your day-to-day accounting. It does not change your day-to-day operations or the fact that you want to sell your oldest vehicle first. Again, it's all on paper, but it gives you real dollars. And back to, you know, what we alluded to, we'll be back on in 2 weeks, August 7th, to discuss the new tax law. And just wanted to make you aware that, you know, besides shoving more information down your throat, we're happy to work with you, take a second look at your tax return or financials, and see if there's some things that might be able to help you out beyond just LIFO. So throwing that out as well, one of the benefits of being a member of the NPDA is a complimentary analysis on your current situation that we're willing to do for you.
Again, we really appreciate you guys doing that. And everybody, join us for Connect in Columbus, Ohio, and meet Andy and Jane in person and talk to them further about LIFO and the big, beautiful bill and anything else you want to talk about. But that will
Absolutely.
be, yes. So Connect will be on September 21st through the 23rd. And it's a gathering of dealers from across the country, all the dealers in the industry, you know, the import dealerships, Harley Davidson, the Powersports, ATVs and UTVs. All of us are going to get together, and our wonderful partners like CBIZ and our trainers and our distributors. And it's an amazing opportunity to exchange ideas. It's kind of like a 2-day 20 club meeting without the you know, sit down and write everything down, because you get to meet each other and you get to exchange ideas, and it's just really fantastic. And the time is now. NPDA is all about improving the industry and bringing it up, and we all have to work together, because a rising tide raises all ships. And that's what the NPDA is all about, is increasing the entire industry, working together. We need to work together. We don't, it's not, you know, me and you, it's us. And that's how we need to continue to be. This webinar, by the way, has been recorded, and it will be available on our website, npda.com. And also at npda.com, you will find more information on Connect. So give that a look. Thank you, Jane and Andy. CBIZ's support of the Powersports dealers is appreciated. You guys are fantastic, and we will see you next week for your follow-up webinar. Is it next week? Wait a minute. Is it next week, or is it the week after?
Andy, do you have our date?
It's the 7th.
It's the 7th. Fantastic.
Whatever day the 7th is.
Well, we are excited. Thank you for having us today. And I would echo your comments on the conference, the Connect. We go to a lot of conferences. It was your inaugural, and it was one of the best I've ever been to. Just the energy and the collaboration between all of the dealers and the partners there was just amazing. I enjoyed it so much. So
oh, thanks, Jane. It really was, wasn't it? It was fantastic.
It was just amazing. Yep, it was a great time. I thought it was so well done.
Thank you. And thank you guys for joining us today during the busy selling season you have going on.
That's right.
I appreciate you guys taking the time. And I super appreciate you being a part of NPDA.